Penguin Random House Audio presents How to Listen When Markets Speak: Risks, Myths, and Investment Opportunities in a Radically Reshaped Economy by Lawrence G. Mcdonald with James Patrick Robinson. This is the author, James Patrick Robinson. Note to listeners: this audiobook includes a downloadable PDF with charts and graphs from the book. To Annabella, Gabriella, and Marcus, and to Dad, my mentor for decades. Without his guidance, this book wouldn't have been possible. Author's note: this book is the result of 15 years spent roaming the hallways of global finance. When Lehman Brothers failed, I thought I had lost everything. Like a bird thrown out of the nest, I had to reinvent myself. On that long, sometimes lonely road, publishing the inside story of Lehman's collapse and giving lectures on the economy throughout the world, I somehow amassed a team of brilliant minds who became my brain trust in the coming years. Blessed with good friends and great mentors, I leaned heavily on their wisdom to write this book. For each person who shared their macro lens on markets and allowed me to see with great clarity the ebb and flow of international money, I remain eternally grateful. It is to you that I owe this book. Foreword by Neil Ferguson. In How to Listen When Markets Speak, Larry Mcdonald prophesies a new era of persistent inflation, an escalation in global conflict, a multipolar world teaming up against the United States, the horror of a weakening dollar, a series of sovereign debt crises, and a thundering of capital out of financial assets into hard assets, not to mention catastrophic shortages of natural resources. There is always an audience for prophets of doom, as I pointed out in a book of my own, Doom, The Politics of Catastrophe, and doom-mongers have prophesied thousands of the last zero ends of the world. But Larry Mcdonald is in a different category. The author of the definitive insider's account of the fall of Lehman Brothers, a colossal failure of common sense, he has a remarkable ear for financial markets, the result of decades of Wall Street conversations going all the way back to the stock market crash of 1987. The message of his new book is not that the world's about to end, but that the global economy is going through a paradigm shift. The markets are already telling us that. You just have to have your ear to the ground, the way Mcdonald does. Or maybe that should be your ear to the trading floor. The trouble with Wall Street chatter is that the ratio of noise to signal is pretty high. To try to strip out the noise, Mcdonald has developed a model of financial risk based on 21 systemic risk indicators, including the corporate default rate, stock market short interest ratios, and investor sentiment surveys. Since 2010, when he founded the Bear Traps Report, he has been one of my favorite channels of communication with that talkative and moody individual known as Mr. Market. The key thesis of How to Listen When Markets Speak is one with which I heartily agree. The end of the Cold War in the late 1980s and early 1990s ushered in a generational financial boom that has lasted close to 40 years, albeit a boom punctuated by numerous crises. The principal drivers of the boom were globalization and the integration of Asian labor and savings, not forgetting talent, into an increasingly borderless financial system that successfully harnessed the innovations in information technology emanating from Silicon Valley. These powerful forces drove down inflation from the heights of the 1970s to the low point of 2009. But that era is now over. What ended it? The prime suspects are central bankers who grew increasingly reckless in their efforts to stave off crises, notably in 1998, 2001, 2008 to 2009, and 2020, by cutting interest rates and then buying bonds and other financial assets, quantitative easing, massively expanding their balance sheets. These measures, McDonald argues, acted as a volatility suppressant, encouraging structural shifts in financial markets in favor of exchange-traded funds, passive investment, and short volatility strategies. At the same time, China's admission to the World Trade Organization and its securing of permanent normal trade relations with the United States in 2001 ensured a sustained hollowing out of U.S. manufacturing capacity, with all its social and political consequences. Third, fiscal policy, beginning with the global war on terror and culminating in the Biden administration's various industrial policy measures, has driven the U.S. federal debt to a height relative to GDP that is unprecedented since World War II. Fourth, the political backlash against globalization has produced a new protectionist and anti-China bipartisan consensus in Washington. Finally, the global campaign to discourage investment in fossil fuels in favor of renewables is leading to an unintended energy crisis. McDonald's conclusions are bold. The great migration of capital, moving from growth stocks into value stocks, has only just begun. We are in the first inning, and as every rally in the growth space fails, it will bring more disappointment to those investors who are still searching for the promised land. One day, they will grudgingly pack their bags and walk into the value sector. They will see the rally happening in gold, silver, platinum, and palladium. In other words, the inter-Cold War era of disinflation is over. Inflation is not returning to 2% or lower. The dollar is destined for a period of weakness, and investors would be well advised to ditch tech stocks and invest in precious metals, not to mention copper, lithium, cobalt, graphite, and uranium, all of which will be in short supply relative to the ambitious demands of the energy transition. Some might say this makes too little allowance for the likely benefits of further technological innovation. Think artificial intelligence, or the potential comeback of secular stagnation as demographics and debt dynamics slow down growth. But McDonald's case for the financial equivalent of a fourth turning is strengthened by some star witnesses, including such legendary investors as David Tepper, David Einhorn, and Charlie Munger. Interviews with these luminaries, as well as with less well-known members of McDonald's Wall Street network, are a key part of what distinguishes How to Listen When Markets Speak from other books on contemporary finance, most of which ought to be titled How to Stay Awake While I Pontificate. McDonald's humility is a rare thing in the financial world. To his credit, he has never forgotten that he started out as a pork chop salesman along the Cape Cod Canal. I can't pretend to know the financial future. Back in 2008, my book, The Ascent of Money, did a pretty good job of foreseeing the global financial crisis, but subsequent events caught me out more than once and taught me the valuable lesson that to anticipate markets, you really do need to listen before you talk. That's why I became a regular reader of the Bear Traps report, and it's why I recommend Larry McDonald's new book, and it's why, as soon as I'd finished it, the first thing I did was take a long, hard look at my own portfolio. I predict most listeners will do the same. Introduction: A Banquet of Consequences. Sooner or later, everyone sits down to a banquet of consequences. Commonly attributed to Robert Louis Stevenson.
Sample complete. Ready to continue?